You've now had a couple of problems where you had to calculate and then record and then post transactions involving depreciation. So major assets wear out over time, and accountants need to keep track of that so that their books are accurate. So that's a relatively simple task, whether it's annual depreciation or done on a monthly basis. So now we're going to look at the end result of all that. That is, if we look at an asset that we have depreciated, eventually it wears out or it declines in value to the point where we either throw it away or we trade it in or we sell it for some salvage value. And today we're going to take a look at how that works. On your screen, you see the General Journal for the Delphos Ice Rink. You had that problem just recently, and we're going to take a look at what happens in the future here. Take a look, first of all, on the right under the instructions here. We're going to assume that on January 1, 2019, Delphos Ice Rink bought a new Zamboni. This is the ice resurfacing machine for $23,000, and you had a problem where you had to figure out the depreciation and record that. And the business estimated that this machine is going to have a useful life of 12 years. At the end of those 12 years, the Zamboni's trade-in value would be $500. So the amount of annual depreciation that you figured out was $1,875, and this business has an annual accounting period. So in this problem, in this video demonstration anyway, we will assume that it is now 12 years in the future. And you are now through high school, through college, and now you are an accountant for this business. And the Delphos Ice Rink is not going to sell that Zamboni. It's at the end of its useful life, and we're going to sell it for $500 on December 31st, 2030, 12 years in the future. And you will now need to make the proper entry into the journal and then post it to the ledger. And this is a different type of transaction that you've had before. In the past, you've had a number of transactions where you debited cash and credited sales, or debited accounts receivable and credited sales. This is not a sale. This is not what the business is in existence for. We don't have an ice rink just to sell Zambonis. So this is not a typical sale. But we are getting rid of an asset, so we have to be able to record that. Let's take a look at three relevant accounts in the ledger. At the bottom, we have our typical tab. And if we go there, I've shown you just three accounts. One is cash, account 101, and this probably would have a whole lot of entries in it, and they're not relevant to this demonstration, so we're not showing any of those entries in the cash account right now. In the Zamboni account, however, in this account, which is an asset, this happens to be account 104, and remember, this is supposedly, we are assuming, the year 2030. And way back on January of 2019, we bought this Zamboni for $23,000, and this account has not been touched. It says that for the past 12 years, showing the original price of that Zamboni. What is different, though, is the accumulated depreciation account down below, and I've recorded what would be here. If this is an annual accounting period, that means every year at the end of 2019, for example, we would have debited depreciation expense for the Zamboni, and we credit this account for $1,875. And remember, these two accounts, 104, 104.5, would be shown on the balance sheet. So anyone looking at it can see the original price and then how much has been depreciated. After the second year, 2020, the same debit to depreciation expense for the Zamboni, and a credit to this account, accumulated depreciation, another $1,875. So we do that every year. You can see that this has been done for the past 12 years, and we are now at the end of 2030. And to make it simple, we're at the very end of it. At the end of the year, we once again debited depreciation expense for the Zamboni and credited this account. So we have 12 times that we've done this transaction. And now the balance of this account, the accumulated depreciation for the Zamboni, is $22,500. We added up those 12 entries of 1875. So that's what it looks like. Now, we need to record the entry that shows the sale of this ice resurfacing machine. So these are the three accounts that we will involve here because this is going to be a cash transaction. So we go back to the journal and we will assume this is December 31, 2030. And we will debit cash because we are receiving cash. And we are assuming over here, as we said in the instructions, that we sold this for $500 cash on this date. So $500 is what we received. Cash goes up by $500. Now we've got two credits. Again, this is not a sale. We don't credit sales, but we credit two accounts because we have to take these two accounts off the books. That's a term that you may hear from time to time. We need to clear the books of an asset that we no longer have. We don't have that Zamboni machine anymore, at least the one we bought in 2019. So we have to get rid of that. So one of the accounts from the ledger over here will be the actual Zamboni account. So we credit that account by the amount that it takes to close that account. In other words, we want this account to balance out to zero. It has a debit of $23,000. We now need a credit of $23,000. So that's what we put into the journal. And we now have one more entry here. Again, remember, every entry has to show that debits equal credits, and we're nowhere near that right now. So the other one is the account we just looked at a few minutes ago. And we need to close this account. We no longer need it. It's not of any use to us because we got rid of this Zamboni machine. So this account has to go as well. We need to close it. Again, if we look over here in the ledger, this account, accumulated depreciation for the Zamboni, has a credit balance of $22,500. So we need to close that with a debit. That will make it balance zero. So over here, we put $22,500. And if you, now we need a little description here. Okay, we sold our old Zamboni, and this entry has two debits, which equal $23,000, and it has a credit. So debits equal credits. So let's post it. And we'll go to cash on 12/31/2030. And it's a debit because we gained $500. That's all we sold it for. And this was, I think, journal page 13. And the 101 goes back into the journal as we always do when we post it. And now we go to our Zamboni, that account. And again, this is 12/31/30. And we credit the $23,000. That's what we did in the journal. And this was J13. And this is account 104. Back into the journal. So now the Zamboni, if I can get to it here, the Zamboni account now has a zero balance. we no longer have that machine. So that's what we want to happen. And finally, in the journal, we have a debit to accumulated depreciation. Let's post that to that account. So again, the date and the debit as we saw in the journal. And as you see, obviously the accumulated depreciation account for the Zamboni now is 0. So we have effectively closed these two accounts. We no longer have the Zamboni. We no longer need this account either. So we have closed both of them. Back in the journal. Whoops, it's not showing correctly, but that should be 104.5. There it is. And now this account has been completed. So this is what happens when we sell an asset. We debit cash for whatever we got for the asset, and we credit the asset to close it out. But we have to close it out by the amount of money that the account has in it, the $23,000. And then we also have to close out the accumulated depreciation account, the $22,500. And then our our ledger looks like this. Cash has been debited, and these two accounts have been closed. We call this closed because they have 0 balances. If we buy a new Zamboni machine, we may want to record it as new Zamboni or record it as Zamboni 2030 or something, so to differentiate it. But if we did that, we'd create a new account, and then we would debit that account by whatever we paid for it and credit cash or credit accounts payable. So this is, again, one other little part of the whole depreciation process. So keep this video handy, review it if you need to. You may see this in the near future, this kind of a problem on a test over this topic. At this point, I want you to go back to your course page. There's another video to watch and some questions to follow that video.